If you clicked on this video, you're probably wondering when is the right time to sell a stock? Well, if you ask legendary investor Warren Buffett, he will say the best time to sell a stock is never. All right, that's it for the video today. Thank you guys so much for watching. Please hit that like button. Please subscribe. I'm just kidding. Obviously, that's not the video. Today, we're going to talk about some good reasons to sell a stock, some bad reasons to sell a stock, and we're going to look at some recent stocks that I sold and find out how they've done since I sold them. And I'll talk about kind of why I sold them and my methodology behind that. So I wasn't kidding about the Warren Buffett thing. His favorite holding period is forever, but that doesn't mean that he actually holds all stocks forever. He does sell stocks from time to time, and lately he has been making headlines for selling nearly 56% of his Apple position. Now, we need to keep in mind that his Apple position was worth about $88 billion, which is larger than the market cap of most companies out there. But all that is to say is that Warren Buffett does, in fact, sell stocks, even though his favorite holding period is forever. So how does he know when to sell stocks? At Berkshire Hathaway's 2002 shareholder meeting, Buffett was asked when he sells stocks, and he talked about two main reasons. The first is when his fund needs money for a more attractive opportunity. He says, I would reluctantly sell something terribly cheap to buy something even cheaper, which is sensible, I suppose. And the second, more common reason is because of changing fundamentals, which is also one of the reasons why I sell stocks. He also mentions a changing competitive landscape. He says, we sell really when we think we're reevaluating the economic characteristics of the business. Back in 2002, he had been selling McDonald's and Disney. He's saying, we think McDonald's has a fine future, we think Disney has a fine future, but we don't think their competitive advantage is as strong as we thought when we initially made the decision. So I would argue that that's a pretty good reason for selling a stock. I found this nice little article from Bankrate called How to Know When to Sell a Stock for a Profit or a Loss. And I think that's something that's really important, is that even if you're down on a position, you shouldn't not sell a stock just because it's down. It really sucks to realize losses, but that is a part of investing. Investing comes with risks, and unfortunately, you're not always going to make the right decisions. Even Warren Buffett has some losers. If we look back at the Warren Buffett example, Berkshire Hathaway actually just realized a pretty big loss on Paramount stock. So even legendary investor Warren Buffett is not perfect. You guys are not perfect either. I'm not perfect. Nobody out here is perfect. We're going to have to sell at a loss sometimes. And sometimes it's best to just swallow your pride and sell that losing stock, even if you've lost 70, 80, even 90% on it. One of my friends actually ended up doing some tax loss harvesting, and we'll talk about that. That's another reason why you can sell a stock. And he had some stocks that were down 95%, and we just kind of had a nice laugh over it. I didn't think any less of him because he lost 95% on a company called Nautilus, which made treadmills or something. Anyway. Getting back to this article, how do you know when to sell a stock for a profit or a loss? They talk about 7 good reasons and 4 bad reasons. So we're going to talk about those 11 reasons, and then I'll show you the stocks that I've sold recently and how they've done since I sold them. So the first good reason to sell a stock is that you found something better. And I agree with that. I think you only have a limited amount of assets. Even Warren Buffett in his infinite wealth does have limited assets, right? So for every stock you hold, you are making a conscious decision that you would rather hold that stock than anything else. Now, obviously, you're going to be diversified, hopefully, so you're going to have a small basket of stocks. But let's say you have 20 stocks. You're holding those 20 stocks over the thousands of other stocks that are out there. So by owning those 20 stocks, you're making a conscious decision not to hold other stocks. So it might be likely that in your search of those thousands of other stocks, you might find something better than what you're currently holding. And that's okay. According to Bankrate, investing is ultimately about earning the highest rate of return possible while taking on minimal amount of risk. Sure, in a perfect world, that's what it's about, but that doesn't happen, right? If you want a higher reward, you tend to have to take on more risk. Otherwise, you just get very, very lucky, that kind of thing, right? So as business characteristics and market prices change, investing opportunities will change with them. If you own a stock but find another investment, perhaps another stock or something else entirely that you find more attractive, it could make sense to sell what you own in favor of a better opportunity. In looking back through my recent sales, I can tell you that you found something better is not a reason why I've sold any of my stocks recently. However, what I do is something called trimming, and we'll talk about that in a little bit. Another good reason to sell a stock is that you made a mistake. And I don't know about you guys, but I never make mistakes. I am perfect. Everything that I do is 100% accurate, so this never applies to me. We're just going to skip this one. 3, the companies, okay, I'm kidding. Mistakes happen, and the sooner you realize it, the better. Sometimes it turns out that a business isn't what we thought when we purchased the stock. Maybe it faces tougher competition than you thought, or its positioning is getting worse. I think that this one kind of goes along with the third reason, the company's business outlook has changed, and I'd say that these two reasons together are a reason why I've sold some stocks. The Business Outlook example is pretty good. So they talk about Barnes & Noble. They say if you owned Barnes & Noble or Borders Group back then in the 90s when Amazon was starting to take market share, it would have been wise to sell your shares ahead of the eventual downturn in the business. There are just businesses that are going to become irrelevant. We think about, video stores like Blockbuster. That's a famous example. There was no reason to use Blockbuster when things like Netflix and other streaming services came along. It just doesn't make sense. So with the advent of technology, sometimes you're going to need to sell a stock because they're going to get displaced. So I think that is a great reason to sell a stock. Number 4 is tax reasons, and like I talked about with my friend, tax loss harvesting is a very common practice. Typically towards the end of the year, November, December, certain investors, if they've lost conviction on a stock and they have significant losses on it, they will sell that stock in their taxable account in order to quote-unquote harvest losses. You might do this to offset the gains that you made during the year, or you might just want to claim a little refund on your tax bill. Keep in mind that you can only claim, at this point, $3,000 in net losses each year. So if you have net losses of $5,000 in a year, you would carry forward the other $2,000 to the following year. So what a lot of people do, they might say, okay, I made $10,000 in gains this year. Let me sell off stocks where I've lost $10,000 so that I can offset those gains for tax reasons. This will only apply if you're using a taxable account. If you're using something like an IRA, there is no tax loss harvesting. Unfortunately, if you lose 90% of your money on a stock in an IRA, you are just out that money. You don't get to claim that on your tax return. That's the downside of an IRA, and that's why I like to put my safer quote-unquote stocks, my dividend stocks, in my Roth IRA, and I like to put my more risky tech stocks in my taxable account that I share with my wife. Okay, so let's talk about rebalancing my portfolio because that's something that I do a lot. That's another good reason to sell a stock. If you've had a stock perform particularly well, you've probably noticed that it accounts for a larger portion of your overall portfolio than it did when you bought it. If it makes up an outsized portion of your portfolio, you might consider selling it back down to a lower weighting through portfolio rebalancing. Now, I did that with Tesla recently. So if you guys watched my portfolio video where I talked about the 25 stocks that I own, Tesla, it used to be like the 10th top stock. And then before I made that video, it jumped up to the 2nd top stock. I still liked Tesla and I'm still long-term bullish on Tesla. If you trim stocks when they become overweight in your portfolio, you are locking in some gains and you're also de-risking a bit because as a stock continues to go up and up and up and up, they theoretically also have more downside. Now, this would have been a bad thing if you owned something like Nvidia. Like, let's say you trimmed Nvidia after this massive 90% run in early 2024. Well, you would have missed out on another 35% gain. So the reason I trim and not sell is because I still have exposure to that stock. It's just less exposure. So if the stock goes up, great, you still own it. But if it goes down, oh, good, I trimmed some. I'm glad I locked in a few gains. As far as when to do that, usually I just go by intuition. If a stock makes a massive run up and I don't believe the reason is justified, I will trim. I did the same thing with Starbucks recently. I love Starbucks. I think it's a wonderful company, and I do still think that they are reasonably valued. However, when the stock rallied over 20% on the CEO change, I did trim a little bit because, like I talked about, this was my largest position. It had become over 10% of my portfolio after the run up, and I didn't think that that was warranted, so I did trim about a third of my Starbucks position. So I still own Starbucks. It's still a pretty big position. So if the stock continues to go up, great. But if it crashes back down, if maybe the new CEO doesn't execute as much as the market thought he could, then at least I've locked in a little bit of those gains. All right, enough yapping on that one. The next good reason is that the valuation no longer reflects business reality, and this is a reason why I've sold stocks recently. This one comes down to a little bit of financial analysis. There are certain valuation metrics that you can use. You can look at a company's historical price to earnings or price to sales if they don't have positive earnings, or price to free cash flows. I like to use a combination of those three methods. So if a company typically trades at a price to sales of 3 and a PE of 20 and a price to free cash flow of maybe 30, and then all of a sudden it's price to sales of 10 and a PE of 50 and a price to free cash flow of 70, that I think might be a decent reason to sell unless the business has fundamentally improved or where their fundamentals are going to catch up to those valuations. And that's why I say this takes a little bit of financial analysis, and that's why my channel is great. So if you are new, please subscribe because I do analyze companies at my channel and I talk about these valuation metrics. So if you ever want to know if I think a company is undervalued, overvalued, definitely subscribe and stick around and I will do that. And then the 7th good reason is you need the money. And okay, so Emergencies happen, but if you need money in the short term, please do not invest it. Investing is for long term. I see so many people who invest money, oh, I'm just in it for a quick swing, I'm just in this for a quick trade. How do you know it's going to go up in a quick amount of time? You don't know that. You can't go into a stock for a quick trade. I'm sure I'm going to get comments of people who say, oh, I do that all the time and it works out. That's great, but what happens when it doesn't work out? If you have money that you need in the short term, please do not invest it. Put it in a nice little money market, earn your whatever 4 or 5% interest, and just you won't have to worry about the stock going down. If you need the money, put it in savings. If you don't need the money for 5 to 10 years or more, feel free to invest it. I'll get off my soapbox now. 4 bad reasons to sell a stock. 1, the stock has gone up. I am so guilty of this. As soon as the stock starts going up, I'm like, oh man, I should sell. I'm so jittery, and I've had to overcome that psychologically. When a stock goes up, it should not be a reason to sell. If the business has not changed, if the business is still the great business that you fell in love with when you invested in that stock, please do not sell the stock just because it's gone up. Now, this goes back to that portfolio rebalancing. So if it's gone up so much that it's now a massive portion of your portfolio, you can trim it, but don't sell it completely if the only thing that's changed is the stock has gone up. Stocks go up. That's what stocks do. So if the stock has gone up, great. The stock is doing its thing. Let it keep riding. Another bad reason, the stock has gone down. I see this so often, especially with newer investors. They'll buy a stock and immediately it'll drop maybe 20% and they'll say, wow, I was wrong about this stock. I should probably sell it. No. You might not be wrong. Stocks also go down. They don't just go up. Over the long term, they tend to go up, but sometimes quality companies go down. Let's look at Starbucks. I think I started investing in the $80 range. After the last earnings report, the stock dropped like 15%. If I had sold then, I would have sold Starbucks at $74 a share, and I would have missed out on a nice 27% gain in the following 3 months. So don't sell a stock just because it's gone down. Sell a stock that's gone down if the fundamentals have changed, if the underlying business is not as strong, which again requires a bit of financial analysis. If you don't like financial analysis, you may just want to buy index funds. And finally, some bad reasons are economic forecasts and short-term concerns. I agree. I think it's best to tune out the noise of the broader economic picture. If you're investing, you should be a long-term investor, so temporary economic events should not factor into your investment decisions. For me, when I invest, I'm not worried about the Fed. I'm not worried about the presidential election. I'm worried about the next 25 years and will this company continue to have a competitive advantage in 25 years? I understand that there are some people out there who like to trade. Those people should be worried about the Fed. I don't like to trade. I like to invest. I think it's much more sensible, and I like the slow, boring process of building wealth and not speculating. All right, so without further ado, let's talk about some stocks that I sold and how they've done. Here's a spreadsheet where I listed 7 recent sales in my portfolio from 2024. And I'm not counting trims in this list. I'm only counting full-on sales. So companies that I've completely sold my entire position out of. And by the way, when I sell, I do tend to use reverse dollar cost averaging. So when I buy into a stock, I buy in slowly over time, something called dollar cost averaging. When I sell a little bit every day, something called reverse dollar cost averaging. All that does is help to eliminate market timing risk. So since I sold these 7 stocks, 4 of them have decreased in value significantly, so I'm glad I sold those. 2 of them have increased somewhat significantly, and 1 of them has been flat. So let's just go in order of when I sold these stocks. I sold the company Teladoc back in January because of their weakening fundamentals. Tech stocks tend to be a lot more volatile, and they have a lot of future growth priced into them today. With Teladoc, they announced in an earnings report that they were not planning to see any growth for the next 3 years, so flat revenue growth. Teladoc technically is a growth stock, so when you see no revenue growth for 3 years, that's not good. It's not a value stock. It's not a growth stock. It's just a struggling business. So Teladoc could turn things around, but for me, I saw those weakening fundamentals, and they had actually been weakening for a while, and I kind of had my blinders on. So finally, I decided, yep, it's time to sell Teladoc, and the stock has since dropped 65%, so I'm glad that I did that. The next stock that I sold was Bill Holdings. It's a fintech stock that helps companies automate their financial processes. I actually sold it at a loss at $67. I think I was long the stock around 70, but even though I sold it at a loss, it dropped another 25% after I sold. The reason I sold was because their thesis changed. They were seeing a lot of competition from Intuit. So QuickBooks had recently announced basically a Bill Holdings competitor that did the exact same thing, but with QuickBooks. Bill tended to be a bit cheaper, so better for small and medium-sized businesses, but Intuit's QuickBooks version was just a lot more robust, and I saw that as a a huge competitive threat, so I did end up selling Bill holdings. That doesn't mean Bill can't survive. It was just that my thesis on Bill had changed. I originally thought that they were a leader in this financial process automation, invoice automation, but Intuit, really, you can't compete with the big dogs there, in my opinion. The next stock that I sold was Unity. I talked about this in my How to Clean Up Your Portfolio video. That stock is down about 37% since I sold, and that was, again, weakening fundamentals. Essentially, what Unity does is they are a platform for video game developers, and they also have a lot of applications in AR and VR, which is why I bought the stock initially. However, they were seeing some stalling growth, and what they tried to do was pivot, and they divested some of their businesses that weren't as profitable, and they're focusing now on their core portfolio, which is things like their advertising and their video game development platform. However, even that core platform is not growing, it is not expected to grow, and they are still not turning a profit. So just like Teladoc, not a value stock, not a growth stock, those weakening fundamentals caused me to sell. Next is Toast. This was similar to Bill, where I was worried about their competition. I actually made a very nice gain on Toast. I started buying Toast at like $15, sold it at $24, so that was a wonderful gain. So I was happy with that. But again, one of the bad reasons is because the stock goes up. So I did not sell the stock because I was up. I sold it because I started to see so much competition in this space. Toast is a payment processor for restaurants. However, restaurants have so many options. They can use Toast, they can use Square, they can use Clover, they can use Shift4. And I didn't see where Toast had a true competitive advantage. In fact, I had been talking to some servers who hated Toast. So I just thought that with the competition rearing its ugly head and Toast valuation increasing and increasing, I thought it was best to part ways with Toasty, and the stock has been flat since I sold. I sold Pure Storage, and that was clearly a mistake because it went up another 15% after I sold. I sold simply because of valuation, and that's the same thing with First Solar. With both of these stocks, they had massive run-ups in short amounts of time. So that doesn't mean that they're going to be overvalued. But in this case, the stock run-up was much more than the fundamental run-up. So with NVIDIA, the reason why that stock kept going up is because when the stock went up, their fundamentals also went up. They were seeing triple-digit revenue growth, triple-digit earnings growth, insane demand that had no signs of slowing down. So when that comes with a share price appreciation, that makes sense. Those are just going up in tandem. With First Solar and Pure Storage, the share price was going up way more than their underlying revenue and earnings growth. So I ended up selling those stocks. It worked out well for First Solar, and it didn't work out as well for Pure Storage. And finally, we have Meta Platforms. This one is a bit harder for me to wrap my head around, but essentially, when I invest in a company, I need to invest in what that company stands for as well. I know that this is probably not the most popular opinion, but for me, I like to be a fan of the business that I'm investing in. So with Meta, I invested them on their strong financials. However, I'm not actually bullish on Meta Platforms. I don't really like social media. I don't use Facebook. I don't use Instagram. I actually have an app on my phone that blocks my Instagram, so I can only spend like 5 minutes on it each day. And so I kind of had to ask myself, why am I invested in Meta Platforms when I myself kind of despise their products, right? So for me, I had to think, I am voting on this company with my money, with my actual money that I've earned. I don't want to support a company that I don't like with my money. So that's not the best reason to sell a stock, and I wouldn't suggest you do that. But I also believe that when you invest in a company, you are truly supporting it. You are taking your money and exchanging it for ownership stake in that company. I didn't want ownership stake in Meta Platforms. I didn't want to support what I believe is not a very healthy business for the world, right? Social media, I don't think is doing very great things for the world. You might disagree, but that's my own personal belief. And that's why I sold Meta Platforms. So that's probably the weirdest one on this list. But otherwise, these are the stocks that I've sold recently. The best thing to do when you sell a stock, in my opinion, is to just move on and never look back. So I hope you guys enjoyed this video about when to sell a stock. If you have any questions, please leave them down below in the comments. And if you liked this video, please like it. If you disliked it, please hit the dislike button and give me a suggestion on how I can improve. I really am trying to improve because I'm still new at the whole YouTube thing. So thank you guys so much for watching. I hope you all have an amazing day.